Good afternoon, investors. We are starting. My name is Gertrude Njeri. Our topic of the day is how to pick good stocks to invest in. Our trainer of the day is our financial markets analyst, Anthony Kiambati. He will be taking us through our topic of the day. In the meantime, leave any questions that you have about the topic in the comments section below, and we will be happy to address them in the course of this training.
Hello guys. Let's have like 2 more minutes so that more guys can join, and then we can start. So in the meantime, you guys can join our WhatsApp group. I've sent a link on the chat section. So just make sure you join so that you can be receiving daily updates on the market. Anyway, I think we can start now. Let me share my screen so that we can start. So click on the link on the chat section and you'll be able to join our WhatsApp group. It's called Hisa Investors. So I hope everyone can hear me. So if you can hear me, please raise your hand so that I can confirm. So let's get started. So last week we talked about US ETFs. The other week we talked about US stocks. Today I want us to talk about how to pick good stocks to invest in. Basically, we have over 3,000 stocks on our app. We have over hundreds and hundreds of ETFs on our app. So how do you narrow down on the best or some of the best stocks you can invest in? So the process of picking stocks is basically just like what you guys do when you go to the market. Basically, you want for the guys with businesses, you want to look for businesses that are selling at a bargain, or businesses that you think are sort of undervalued, and then buy these businesses and then sell them at a profit. But the advantage of the stock market is, unlike the normal markets, you also get some other perks that come with buying stocks, such as dividends, especially when you buy dividend paying stocks. So I'll put this process into several steps. You can start with any of the steps. I just had to put it into steps so that you guys can be able to follow along. Anyway, so the first step, as always, when it comes to picking stocks, is determining your investment goals. And investment goals are different for everyone. So the reason why you guys need to determine your investment goal is because this will determine almost everything else that you will do after that, especially when it comes to even the specific assets that you will pick will be determined by your investment goals. So let's say your investment goal is to make some money in the short term, and then you are out of the market. There are specific stocks that you go for. And then let's say your investment goal is to basically find a place where you can preserve your capital and just sort of like a saving sort of something like that. Yeah. So for that, there are specific assets that you go for to cater for that. So that's the thing about determining your investment goal. So let me just go through a quick example. So for an investor who is interested in generating regular income, this investor will go for maybe the dividend stock. So we have the likes of dividend aristocrats. Pardon me, a few minutes. Okay, sorry for that. So for investors who are interested in dividend in a consistent income, they'll go for dividend aristocrats. They'll go for some companies that pay monthly dividends, etc., etc. And for someone who is interested in maybe increasing their capital in a short period of time, they'll go for maybe the growth stocks, or maybe they'll go for an aggressive portfolio, basically investing in the aggressive stocks. I mean, aggressive ETFs, aggressive growth ETFs, etc., etc. Right? Anyway, so I don't have a lot to talk about determining your investment goals. I think that should be clear. So basically, your goals will dictate the company that you will buy. So as I've said, investors looking for growth will go for younger companies showing promising revenue growth, etc. Those interested in capital preservation will look for the opposite. They'll go for stable businesses that have been around for decades. And for investors interested in income, they'll search for stocks with good dividend yields and the cash flows and earnings to support those dividends. Anyway, the next step would be finding companies that you understand. So I think one of the things I always tell people before investing in a company, make sure that you understand at least the history of the company, from maybe what the company does, the business model of the company. You might also want to take it further to even understanding the historical returns of the company. And here's why you want to understand the historical returns of the company. I always tell people that if you cannot beat, if your investment or the stock has not managed to beat the benchmark index, then there's no reason to invest in that stock. You might as well just invest in the benchmark index. What do I mean by this? So the S&P 500 has been returning on average, let's say 10% annually, right? So that stock that you want to buy, or that investment or ETF that you want to buy, you must make sure at least this stock beats this return, because it will not make sense for you to go into more risky stock picking when you can go for the less risky option of investing in index funds, or what we call index ETF. So if your investment has not, if that stock that you want to buy or you're looking to buy has not beaten the VOO, or if that stock you're looking to buy has not beaten the SPY, personally, I don't think it's a good stock to buy. So that's one of the things I always use to basically narrow down on stocks. So I think that boils down to understanding a company. So you need to understand that stock. How has the stock performed in the last 5 years? How has the stock performed in the last 10 years? How has the stock performed in the last 20 years? Has the stock managed, or has the ETF, has the fund, anything you're investing in managed to beat the benchmark index? Because what's stock picking? Stock picking is described as an attempt to beat the market, basically. So you're attempting to beat the S&P 500 index. So if your investment is not beating the S&P 500, then there's nothing that you're doing, right? So understanding companies will also go down to, maybe if you have the knowledge to do it, I mean, you maybe go to researching about their financial health, researching what the company has been doing, their management, are they having management issues? You can also research about maybe their books, their balance sheet, what's the position, or what's the strength of their balance sheet. Is their business model sustainable? Has the company been offering consistent dividends, etc., etc.? That's what I call understanding a company. And how is the company positioned for the future? Basically, is the company reinventing itself, etc., etc.? So that's about understanding the company. The next thing you want to determine when picking a stock is, does this company have a competitive advantage? Warren Buffett likes to call this a moat. Yeah. So what's a competitive advantage? A competitive advantage is a distinctive advantage that the company has over its competitors that allows it to protect its market share and profitability. Let me give you just a quick example. There's one that I've sent right now on our WhatsApp group, ASML Holdings. So ASML is the only company in the world that manufactures lithography machinery, which is used in the manufacture of advanced microchips, which are used to power artificial intelligence technology. So this gives them a huge competitive advantage. So these are some of the things you need to look at before investing in a company. Let me give you another random one. So let's say Facebook, that's Meta. Meta currently has around 3.5 billion people using its platforms all across the world. You can imagine 3.5 billion people using the platform of one company. So this gives them a huge networking effect. Basically, if you want to market your product, the first idea that comes to your mind is Meta, right? So you want to determine the competitive advantage of that company you are investing in. Is it competitive enough in the space that the company is operating in? Okay. So I'll send the link to this article so that you guys can read it. So you'll be able to see some wide moat ETFs on our platform. So when you get the article, please click on this so that you can see wide moat ETFs. So basically, wide moat ETFs are ETFs that hold such companies that have these competitive advantages. Okay. So the next step is to determine, has the company been paying dividends consistently? Okay, so dividends usually mean a lot to investors because they provide a steady stream of income. So I think when you find a company that has consistently increased its dividends, this is a good sign that the company is sort of stable and able to last in the markets. So we have two categories of companies, stocks in the market. There's one category called dividend kings. So dividend kings are stocks that have consistently raised their dividends in the last 50 years, right? And then we have another category of stocks called dividend aristocrats. Dividend aristocrats, these are stocks that have consistently raised their dividends for the past 25 years. So this gives you sort of an idea of what you are investing in. These are some of the stable companies which have been consistently raising their dividends. So when you get the article, take your time and read this article, this other article. So we have dividend ETFs. We have some of the Kenyan stocks with the highest dividend yield in May. So that should be Umeme, then followed by Stanchart and a few other banks. Then you have the US dividend kings. You'll be able to see US dividend aristocrats. You'll be able to see US stocks that pay monthly dividends and US ETFs that pay monthly dividends. Going back to our first step of setting your goal. So if your goal is consistent income, let's say monthly income, then this is where you want to be. You want to look at stocks that pay monthly dividends. You want the likes of ARR. You want to look at ETFs that pay monthly dividends, the likes of JP. So take your time, read these articles. Anyway, so after determining that, another important thing you want to determine is, am I getting a fair price for this stock? Right? You don't want to buy a stock at its highest point or an overvalued stock, because there's a high chance that the price might drop. So the two methods of analysis that we use to determine this. So we have fundamental analysis and we have technical analysis. So fundamental analysis is basically determining an asset's intrinsic value. So you use various factors. You can use some ratios, which I'm going to talk about. And then we have technical analysis. So technical analysis is basically looking at charts. And remember, guys, we're going to have a lesson on technical analysis one of these fine days. So be ready for that. So technical analysis is just looking at charts, looking at various patterns on the chart, etc. Then fundamental analysis is the opposite of that, is looking at the fundamentals. So today we're going to look at some ratios that you can use to determine if you are getting a fair price for that stock that you want to buy. So the most common ratio used is usually the price to earnings ratio, the PE ratio. So the PE ratio helps investors to determine the market value of a stock compared to the company's earnings over the past year. So in short, what PE ratio is showing you is that what is the market willing to pay today for a stock based on its past or future earnings, okay? And this is one of the metrics that we use to determine if a stock can be considered a growth stock or a value stock. Generally, growth stocks tend to have very high PE ratios. On the other hand, value stocks tend to have low PE ratios. So going back to your goal, we say that if your goal is to maybe, if you're a value investor, you'll invest in value stocks. And if you're a growth investor, you're more focused on increasing your capital, you'll go for growth stocks. So these are some of the things you use to, this is one of the ratios you use to determine if the stock you want to buy is a growth stock or a value stock. And how we use PE ratio is, you will compare the PE ratio of that stock with the average of the industrial sector that stock is in. So let's say if a stock is in the technology sector, you'll use the average PE ratio of the technology sector. You'll not use you can't compare a stock in the technology sector to a stock in the utility sector. So that's how you use PE ratio. So you guys can do your research on this. So I think one thing you should note is that the PE ratio has some limitations. So we'll talk about another advanced ratio that you can use called the PEG ratio. Anyway, a close relative of PE ratio is another ratio called price to book ratio. So the PB ratio basically measures whether a stock is overvalued or undervalued by comparing the net value of a company to its market cap. So the reason why this ratio is important is it will show the difference between the market value of a company stock and its book value. So the same thing, growth stocks tend to have high PB ratios, while on the other hand, value stocks tend to have low PB ratios. So you guys will be able to hear that at your own time. Anyway, let's go to the other important metric you need to look at. Another important metric you need to look at is free cash flows. Actually, this is very important. And the reason why beginners are always advised to at least start investing in the large cap companies, because they might not these large cap companies, the likes of Apple, Meta, they have massive cash flows. So these massive cash flows give them strength to be able to sustain even hard economic times, right? So that's why it's important to look at this factor of a company. Does the company have free cash flow, right? So free cash flow shows how efficient a company is at generating cash and is an important metric in determining whether a company has sufficient cash after funding operations and capital expenditure. So, and one of the things that an indicator of free cash flow that investors use is share buybacks. Basically, is the company doing share buybacks? And there are several activities or things that companies do that I call, or rather I call shareholder-friendly initiatives. So share buybacks are an example of shareholder-friendly initiatives. We have the share buybacks and also increasing the dividends, right? So what's a share buyback? A share buyback, also known as a share repurchase, is when a company buys its own outstanding shares to reduce the number of shares available in the open market. So companies buy back shares for a number of reasons, such as to increase the value of the remaining shares available by reducing the supply or to prevent other shareholders from taking a controlling stake. So the reason why shareholders love share buybacks is because it allows companies to invest in themselves. Sasa, another reason why a company might do share buybacks is for compensation purposes. So I think Safaricom does that a lot. So awarding their employees and management with stock rewards. So I think there's a program called what ESCOP. I can't remember the name. Anyway, you guys can do research on that. Anyway, so are stock buybacks good for shareholders? So why is this a factor when investing in company? It's not a major factor, but it would be good to see this in a potential company you want to invest in. If your company is doing a lot of share buybacks, that could be a good sign. So public companies use share buybacks to return profits to their investors. So when a company buys back its own stock, it's reducing the number of shares outstanding and increasing the value of the remaining shares, which can be a good thing for shareholders. And then a question, how can I profit from share buybacks? When a company announces that its board of directors has authorized a new share buyback program, the company's share price might immediately increase in value. Investors can profit from share buybacks by purchasing a stock when the buyback announcement is disclosed. I think for the guys on our WhatsApp group, you have seen what has happened to Nation Media Group today. So Nation Media Group has announced a share buyback program today, and you can see it's currently the second best performing stock in the market in today's trading, having gained around 8.97%. This is after Everready. So Everready is leading, but Nation Media is number 2. And this is the reason. So shareholders love to see share buyback. So some of the companies that were having huge share buybacks last year were Apple, Cisco, ExxonMobil, and Broadcom. I think even this year, Meta is also doing a lot of share buybacks, and Apple is doing more share buybacks. So on to the last ratio. So the last ratio is called PEG ratio. So PEG ratio is a modified version of the P ratio. So it seeks to take earnings growth into account. So the reason why PE ratio is considered sort of not enough is because it doesn't always tell you whether or not the ratio is appropriate for the company's forecasted growth rate. So what the PEG ratio will do is that it will measure the relationship between the price to earnings ratio and the earnings growth. So I think if you're using PE ratio, you'd also want to use the PEG ratio. A moment, guys. Please remember you can always use stock screeners to determine these things. So you guys don't have to calculate PE ratio, PP ratio, etc. So we have stock screeners that you can use to screen for companies that meet your desired criteria. So my favorite stock screener is called FinViz. So I usually use FinViz to scan for companies. I think I can take some time just to show you what I mean by this. Let me see if I can do that. Okay, so this is FinViz. So FinViz. So basically, we have talked about such ratios. So you can see some of the companies. So the FinViz is what we call a stock screener. So you can screen. So you can see here I've screened. So you can screen, let's say, companies in the S&P 500 or companies in the Nasdaq, companies in the Dow Jones, or any other custom setting. So let's say S&P 500. So these are 500. So for S&P 500 index has 500 of the largest companies in the US. So you select index. So I've only selected the S&P 500 index. So these are some of the companies in the S&P 500 index. So let's look at the various metrics that we have. We have talked about. So let's see. This is the overview. So you can see NVIDIA, Meta, AMD, Salesforce, etc. So you can click on valuations. So when you click on valuation, you'll be able to see the current PE ratio. So NVIDIA has a PE ratio of 175. NVIDIA has a PEG ratio of 8.27, a PS ratio of 28.37, a PB ratio of 34, a PC ratio of 57, a P to FCF ratio of 24.41, an EPS of -54, EPS next year of 33.68. So you can see all these things, right? Then you can look at the financials. You will be able to see the ROA, return on assets, return on equity of these companies. You can see gross margins, operating margins, etc. Then click on ownership. You'll be able to see the market capitalization of NVIDIA, 765.25 billion, etc. You can be able to see all these details. Then you can look at the performance. You can see the weekly performance, monthly performance, quarterly performance, half-year performance, year performance. Year to date, NVIDIA has gained 108.96%, which is quite interesting. And NVIDIA investors have managed to double their money this year. You can see the volatility, average volume, the price, and the daily change. And look at the technicals. We'll talk about this during the technical analysis lesson. So you can see the simple moving average, 5.35%, 52-week high, 52-week low, the RSI, relative strength index, 62.45, the price, the change, etc. You guys can see the beta and beta. So you guys, I'll talk about beta towards the end of the lesson, ATR, etc. Then you can see the charts. You can see the charts of these companies. Then you can see basic technical analysis, right? And then you can see the news, right? So you can see NVIDIA, Microsoft partner, etc. And then, yeah. So that's a good stock screener. So that's why I love it. Anyway, you guys can do your own research. And then if you want to do specific research on a company, what you do is click on this company. So click on video. You can be able to see the chart for the guys who do technical analysis, and can be able to see the dividend yield, 0.05, which is quite low. So this one is a growth company, a growth stock. And then you can see all these ratios of a specific company, right? Anyway, that's it for FinViz. So you guys will look at it at your own time. I hope you guys have learned. Anyway, so let's go to technical analysis. Another thing, let's say you've looked at all other things. Another thing you'd want to do before buying a stock is do some technical analysis, basic technical analysis. So what do I mean by basic technical analysis? So we have some metrics called RSI. I think you guys have seen RSI when I was showing you the stock screener. So that's relative strength index, and then you have stochastic RSI. So what you do, you'd use a charting software, let's say like TradingView. So let's look at an example. When RSI is below 30, the stock is considered oversold, hence a good point to buy. When RSI is above 70, the stock is considered overbought, hence a good point to take some profits. So let's look at a chart. So when you see a chart like this, you would see RSI is below 30, so at this point, and then you can see someone who bought here was profitable because the market reacted positively and went up. On the other hand, you can see overbought. So let's say they bought here, and then RSI hit 70 around here. So this would have been a good point to take some profit, right? So these would be some simple metrics you'd use to determine if you're getting a fair price for stock. Because at the same time, a stock might be good, but you don't want to buy a stock at a point like this. You want to buy a stock at a point like this, the low levels, right? So you can just go to a site like TradingView and then just put these indicators. I think I'll show you guys how to do that. So let's do it practically. I hope you guys can see my screen. Okay, let's search for a stock. Let's search for Apple. So that's Apple. Okay, you always, if you're a long-term investor, you always want to go for monthly or daily. So let's go to the daily. Let me get the full chart. So let me delete all drawings. And then remove indicators. Okay. So when you go to TradingView, this is what you'll see. Okay, so this is what you'll see. So how can you add these indicators on this chart? So let me see. So how can you add indicators on this chart? What you'll do is you'll come here. I hope you guys can see. You'll come here, click on the indicators, metrics, and strategies, and then search for what I've told you. So just type RSI, Relative Strength Index. Boom. We now have RSI, and then you guys can use the RSI just to do what I told you guys. Yeah. So you can see at a point like this, when RSI was below 30 or even around 20, the market hit a bottom. I think you guys can see, and this would have been a good point to buy. Same for here. When RSI is below 30, around 20, 26, 25, the market this was a good point to buy. On the other hand, we can see a point like this when the RSI was above 70. This would have been a good point to take some profits. I think you guys can see. Same for here. The RSI is above 70. So you guys can see this would have been a good point to take some profits. So this would be just a beginner use of technical analysis to determine if it's the best time to buy that stock. So I don't want to talk about a lot about this because we'll do it as a whole webinar. So I just wanted to show you guys how you can use technical analysis to determine if the stock you're buying is at a good point to buy. So you can see RSI, same here, RSI was below 30. The stock, this would have been a good point to buy. And then just to throw it in kidogo, for the guys who, I know you guys might not understand right now, but this is also a good support zone. And yeah, so I think we'll talk about that later. Anyway, that's it on technical analysis. So I think you guys now know how to use it. So just go to TradingView, search the company. You can search by name or ticker symbol. So ticker symbol is a combination of letters used to represent a stock. So you can use AAPL. And then when you get the chart, go to daily chart or monthly chart, and then click here to add your indicators, right? Anyway, that's it. Let me go back to the notes. Let me go back to the notes. Okay. So let's say you've done some technical analysis. The other thing you want to do is check the historical performance of a stock. So for historical performance, you use sites like Yahoo Finance. You can also use Google Finance to check the historical performance of a stock. So you can check year to date, 1 year, 5 year max. Actually, I prefer max because max shows me the performance of a stock since IPO, since it went public. So for me, before investing in a specific stock, I always want to see an uptrend over the long term. You don't want to invest in a stock that's showing a downtrend. So basically, maybe a stock that started here and then it has just been falling, right? So for a company like this Meta, I think I love this chart because in the end, if you're a long-term investor, you want your money to grow in the long term, basically so you want to invest in a company that has such a chart. So I think this is one of the things I look at. So you can also look at the annual return, historical annual return. So 2013, 105.30%, etc, etc. Yeah. 2014, 42.77%, 2015, 34.15%. So you guys can see the return. So it's always important to look at this. Okay, finally, let's go to some of the last metrics that you want to look at. So these ones will get a little bit complex, but if you don't want to use them, it's okay. But if you would like to use them, they're also good. So another metric you'd use to look at the company before investing in a specific stock would be the alpha. So alpha is used to evaluate the performance of a stock, a fund, or an investment portfolio. Actually, for funds, you'll hear the fund manager, rather when they're reporting the performance of the stock, they'll tell you the alpha of that stock, right? So what does alpha do? Alpha measures the amount of that investment, the amount that investment has returned in comparison to the market index or a broad benchmark index. Let's say, for example, the S&P 500. So in the US stock market, we use the S&P 500 as the benchmark index, right? So alpha usually has a baseline value of 0. So let's say when an investment has an alpha of 1, right? This means that the stock has outperformed the benchmark index by 1%. On the other hand, an investment or a stock that has a negative alpha, this means that the stock has underperformed the benchmark index. And remember, when we were starting this webinar, I told you guys, you always want to invest in companies that are at least performing better than the benchmark index. If you cannot do that, you'd rather just invest in the benchmark index, right? So basically, as I've said, an alpha of 1 means that the investment outperformed the benchmark index by 1%. An alpha of -1 means the investment underperformed the benchmark index by 1%. So if the alpha is 0, it returns match the benchmark. So I think you guys can do more research on alpha. So you'd always want to see companies with a positive alpha. This means that they are performing better than the benchmark index. So the other thing you want to look at is the volatility of stocks. This basically goes to the risk profile. Remember, guys, when we were starting out, we talked about risk and goals. So if your goal is to preserve capital, you don't want to invest in volatile stocks. So how will you determine if like this stock you want to buy is volatile or not, right? Yeah. On the other hand, if you want to grow capital, if you want to make money quick in the market, if you want to grow your capital very fast, you want to go for at least stocks that are moving, yeah, stocks that have some volatility. So for this one, you use a measurement called beta. I think you guys saw the beta coefficient when you are using the stock screen, I think this, right? So it's the beta coefficient is an indicator of the volatility of a stock, a fund, or a stock portfolio in comparison to the market as a whole. So normally we'll compare it to the benchmark index, let's say the S&P 500 index. So knowing how volatile a stock is will help an investor decide whether a stock is worth the risk. So the baseline number for beta is usually 1, which indicates that the stock price moves exactly as the market moves. So when you invest in indices that track the S&P, we'll find that they have a beta of around 1. because the S&P and VOO, they track the benchmark index. So they'll have sort of the same volatility as the S&P 500 index. So a beta of less than 1 means that the stock is less volatile. On the other hand, a beta greater than 1 indicates that the price is more volatile than the market. So basically, if a stock beta is 1.5, it is considered to be 50% more volatile than the overall market. And the way you use beta is you'll compare beta among various industries. So let's say utility stocks tend to have a beta of less than 1, while high-tech NASDAQ listed stocks, let's say the technology companies, they tend to have a beta of greater than 1 because they are highly volatile. So alpha and beta are just 2 of the performance ratios. So there are other ratios that I want you guys to, this is your homework, to go and research about. I'll not talk a lot about them, so you guys go do a research about them. So we have the first ratio is standard deviation. So it will show you the market volatility of the spread of asset prices from their average price. The other one is R squared. So it tells you how much of the movement of your investment can be explained by the change of another variable, such as the benchmark index. So you guys do some more research on R squared. On the other hand, finally, you can also do some research on another ratio called the Sharpe ratio. So it compares the returns of an investment with its risk. So generally, the higher the Sharpe ratio, the more attractive the risk-adjusted returns. So you guys do your homework, research on standard deviation, R squared, and Sharpe ratio. Basically, how to use these metrics to determine if this stock is good for you or good for your portfolio. So finally, we'll come to the end. At the bottom line, nothing takes the place of exhaustive research and doing your due diligence. Always invest for the long term and find good companies with strong balance sheets, a proven track record of success, etc. And then finally, as I've insisted, if you don't have time to do your research, if you don't have time to go for aggressive investment strategies, etc., just to be safe, invest in index ETFs. To make it safe for you, go for the index ETFs. Let me click on index ETFs. So for index ETFs, go for the likes of VO, SPY, QQQ, QQM, IWM, etc. Anyway, that's it from me today. I hope you guys now have an idea of what you need to look at before investing in a stock. I think you guys might be overwhelmed, Kiasi, because that was a lot of information, but you don't have to use everything. Just find a few. And I think the basic of it all, if we can narrow down everything we are talking about today, would be, do you understand the stock? Do you understand the company? If I asked you, why are you buying the shares of ASML? Do you have a reason to buy the shares of ASML? So basically, you need to be able to tell me, I'm buying ASML because ASML has a huge moat, basically, right? Or you need to tell me if I asked you, why are you buying NVIDIA, right? So it's always important to have a reason and to be able to explain, to be able to have basically something backing your decision to invest. Anyway, so I hope you guys have had an amazing lesson. It's time to get your questions. Just type your questions on the Q&A section and then I'll be able to answer them. Anyway, just a reminder, if you're not in our WhatsApp group, please join. I sent the link on the chat section. So, any feedback? Raise your hand if you have any feedback. And And you can talk to us. And Gichohi. Sasa, anyone else? Sasa, that's it from me today. Next week, I think we'll be talking about US rates, so the real estate investment trust, and how you can invest in US rates on Hisa. So make sure you attend. As for now, make sure you join our WhatsApp group and our Telegram group, and I will send a link to this article there and other important or maybe articles that I think might help you. If you need to refer to this webinar, we'll have a recording of it on YouTube. So our YouTube is basically just search Hisa app on YouTube and you'll be able to find a recording of this webinar. Anyway, that's it from me, guys. Have an amazing time and remember to invest, and do your research. Sasa, see you guys.